Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we have a finished three-wave corrective structure in a zigzag ABC and look for impulsive continuation to the upside. The common target for a wave C is hit, the 1-to-1 here, and price has now also hit the 0.618, and that is important because if we were looking for this move towards the upside to be a wave 4 of a C in a bigger 1, 2, 3, 4, 5, then the 0.618 acts as an invalidation for a wave 4, and therefore preferably your wave C is now finished if we're looking at a zigzag structure. A bearish scenario is a WXY more complex structure with a regular flat W, expanding flat X, and then a bigger zigzag to the downside in a wave Y. But even in this scenario, you actually want price to still move towards the upside to move at least above 67.5K. The reason is that the most common target for wave Y is actually already hit, which is the 1.236 at 54.3K, which as you can see is touched. The 1.618 is a very uncommon target for a wave Y. But if we're looking for a zigzag in a wave Y, A, B, and then a wave C towards the downside to still take the lows of A, then the 1-to-1 trend-based subextension is the most common target for a wave C, taken from the start to the end of A to the end of wave B. But you can see that the 1-to-1 here is right on top of the 1.618 if B would move to 67.5K. So the 67.5K level would be a minimum target, and currently we're only at 63.8K. So even in this bearish scenario, you would like to see price to move towards the upside first. Now, because of the WXY not having the greatest probabilities, as the common target for Y is already hit, the bearish scenario is also changing to a longer range structure. So then this first structure to the downside in a zigzag A, B, C is then labeled as a wave W or a wave A, and then we're looking for a wave X to the upside or a wave B to the upside. Now, in both cases, in a WXY as well as a flat A, B, C, most commonly wave X and wave B are zigzag structures, which means you would count a 5-wave impulsive move to the upside, look for a 3-wave corrective structure, and another 5-wave move towards the upside to then finish wave X or wave B. So that is the first structure to keep an eye on locally, also with the impulsivity that we have here. Preferably, your wave X or your wave B would finish at least after the 0.382 fib time, taken from the start to the end of W/A, which is sitting on the 17th of August. After X or B, we're then looking for a move towards the downside in a wave Y or a wave C. So in other words, we will be going sideways for many more weeks in this particular scenario. However, what you can also see, and that's the confluence, is that preferably in your wave X/B, you're going to be moving towards the upside / at least as a bare minimum continue ranging sideways. The most bearish scenario, lowest probabilities at the moment, is a double 1-2, 1-2 in green, 1-2 in blue, and look for a massive wave 3 to the downside. The reason this has low probabilities is because of your green wave 2 touching the 886, taken from the start to the end of wave 1. The 886 is a very rare target for a wave 2, but it is common for a wave B or a wave X, and therefore it increases the probabilities for a wave C or Y to the downside, which in turn increases probabilities to move up at a later stage and continue the bull market, taking out the all-time high. But at least we have to be aware of it. Common target for your blue wave 2 is the golden pocket to the 786, 64.9K to 68K, fibs taken from the start to the end of wave 1. And the 886 again is a very rare target for a wave 2 at 69.8K. So if price would move to the upside, hit 69.8K, it will even more reduce the probabilities for this scenario. Now in this particular scenario, you're then looking for a 3-wave corrective structure to the upside here locally, for example an A, B, C, 5-3-5 move, and look for strong impulsivity to the downside, as you're going to be looking for a wave 3 where a minimum target really would be 43.9K, preferably even lower. A psychology scenario that I explained in the live stream yesterday is the scenario I have here on the chart. So if we're counting bullish and we look for an impulse to the upside, 1, 2, 3, 4, 5, what I would prefer to see is that if we have made a low and we look for continuation of the trend, I actually don't want to see these highs taken with the first leg to the upside. So this is a psychology scenario for the bullish Elliott wave scenario where we look for impulsive continuation in a 1, 2, 3. What I would prefer to see in that case is an impulse to the upside, a 5-wave structure, making another lower high, move towards the downside impulsively. Now what we're then going to get online is, oh, we made a high over here, the all-time high, and then we made a low, lower high, lower low, lower high, and then preferably get a zigzag to the downside, which is a 5-3-5 structure, which can have a high amount of volume. And that is what I would like to see, because it would mimic a wave 3 for continuation to the downside. But instead, you get a 5-3-5 zigzag, which again mimics a potential 1, 2, 3. But then instead of a 4 and a 5, you get a move back towards the upside to start a wave 3. So in this case, you're going to create a lower high. You're going to have a higher low, look for signs of strength, and continuation to the upside. Of course, we also have the CME gap, as many people mentioned yesterday in the live stream as well. And this psychology scenario could also hit that gap and test it as support, or maybe even fill the gap before then continuation to the upside. On the 1 hour time frame, your bearish scenario is an ABC to the upside. So that is a 3-wave corrective structure where we have a leading diagonal in a wave A, 1, 2, 3, 4, 5 in A, finished structure in wave B, and then a wave C towards the upside where you can see the count that I have. So in green, we then have 1, 2, 3, 4, 5, and then you have all the small little sub-degrees as well. Common target for your wave C is between the 1 and the 1.618 trend-based fib extension, taken from the low to the high of A to the low of B, 62.5, 66.3K. The most common target is the 1 to the 1.236. Now, preferably in this scenario, you would like your C to be finished if we look at the sub-degree count as well. And we also hit resistance. So preferably this box over here is going to offer all the resistance that you need for this particular scenario, and then move towards the downside impulsively. Because if we do pass the resistance where we are now, the probabilities increase to move to the next blue box, which is at around 66.8 to 67K. But then you're also going to move above the 1.618 for wave C, which really starts to lower the probabilities for a wave C to the upside as well. So in other words, preferably this box is holding and the resistance here sits between 64.1K and 65.1K. The bullish scenario, on the other hand, is an impulsive structure to the upside. So here we have a 1, 2, 1, 2 in yellow and blue, and then a 1, 2, 3, 4, 5. Now the sub-degree count that I just showed for the wave C would be the same over here for your wave 3. So you have 1, 2, 3, 4, and then a wave 5, preferably then looking for a bigger sideways range on the chart. The common target for a wave 4 is the 236 to the 0.5 Fibonacci, taken from the low of 2 to the high of your wave 3, giving you a target between 63K and 60.7K, with the invalidation for wave 4 being 59.7K. We don't want to hit it if we are bullish. Now what is common is for a wave 4 of a higher degree, meaning in this case the wave 4 in blue, to retrace to at least the price action of a wave 4 of a lower degree, which is what this white box here represents, as that is the lower degree wave 4 in white between 63.3K and 62.3K. And if we then finally look at the probabilities of the different scenarios, then on the weekly time frame the probabilities remain higher for the bullish scenarios. I didn't cover the weekly in this video, but we have covered it many times in previous content. On the daily time frame, the probabilities are higher for a finished zigzag or a continuation sideways in a WXY or flat structure. And then on the number 2 spot, we have an unfinished WXY, where preferably still you would then see a wave B move up to 67.5K, which we haven't touched at the moment, and the bear market should actually go on position number 3. On the 1 hour time frame, the probabilities are higher for an impulsive structure to the upside compared to a zigzag A, B, C, because you can't just give the highest probabilities to an ABC zigzag when you are moving to the upside with increasing volume. There is no market structure change. We haven't yet lost any support. We are moving up with bullish CVDs. We haven't yet seen bearish CVDs. However, we got to be aware of the target areas of a wave C compared to an impulse. And as you can see in the ABC zigzag count, preferably you are going to end your wave C somewhere here, and potentially it is already in right on top of resistance, right? So this is your target area of a wave C. So from a trading management point of view, of course it makes sense to trade safe and think about potential profits and that sort of stuff, right? Because we have a great resistance and we currently see a rejection. So we're pretty much in a little bit of limbo. We have the ABC scenario where currently we are in the target area for C, rejecting at resistance, and we have the bullish scenario, but also in the bullish scenario we are then looking for a bigger range to form. And that's usually, of course, what happens, that when price is moving to the upside on increased volume, the best thing to do is to wait for a range to form, wait for a rejection, and that will give us all the information that we need. But we have now hit a very important area on the chart from an Elliott wave point of view, because it is pretty much the middle between a zigzag ABC and an impulse 1, 2, 3, 4, 5, right? But you can't just out of nowhere give the highest probabilities to a zigzag ABC, because we first want to see price losing support, maybe invalidating an impulse, seeing more bearish CVDs building, and that sort of stuff, right? So for an ABC zigzag to increase in probabilities, we need to, as a bare minimum, lose 62k, lose this lower degree wave 4 range and start ranging over here. Now by all means you can see that this price action is still wave 4 target area, right? So even if you move below the previous range, you are still in the target area of a wave 4. Now what I personally like to look for is local signs of strength. We now have a bit of a move towards the downside after hitting resistance, which is beautiful because that is why we have these boxes on the chart now. And we're going to be looking for areas of support towards the downside. And if I then open all of my levels, you can see that currently here we are at a daily naked point of control. But then the next area to the downside I have here is this point of control at 60.1k. And that of course is quite a dip to the downside. Looking at the support resistance area on a daily time frame, I'll cover this more in the live stream. Also, again, this area is interesting, but that is in confluence with the 618. So preferably we are for the bullish scenario, not dipping too far to the downside, right? We want to see a range in a wave 4, and as long as price is moving down, wait for some signs of strength locally. I explained what I like to look for and take it from there. No, so I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Wave Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.